Hello and welcome to this week's episode of Murphy's Market Minute with Elliot Omenson
Nathaniel Vossman.
and Nathaniel Vossman. So it is 10:57 a.m., unless my computer's wrong, and we are going to be done by 11:02. Quick, fast, and in
Maybe.
a hurry, right? Well, we've been covering a lot of stuff in long form podcasts,
Yeah.
which is great because that allows us to get a lot of that out of the way.
Yeah, and get straight to the
Get
point.
straight to the point, okay? So this specifically is supposed to be about things that could affect you guys in your investments in the market, your retirement plans and stuff like that. So today's a big day. So everything that we're recording right now could completely be upended within a few hours. So look for the updates next week, right? The reciprocal tariffs that Trump talked about are due to hit today. All right. Now, how's the market taking this news? Do you think it cares or doesn't care? Do you think it's positive? Do you think it's up, down? What do you think, Nathaniel?
Well, that's a good question. I think I'm pretty sure the last I checked, it was up a little bit.
That's right. The S&P 500, the Dow 30, the NASDAQ, and the Russell 2000 are all up. The S&P a half a point, the Dow and the Russell a quarter of a point, and the NASDAQ up 70 bips, or 7/10 of a point, for those of you that don't speak in bips. So I think that's very interesting. What do you think about that?
Yeah, I think it's interesting too. And as we've mentioned on long form podcasts, like probably next several months will be pretty volatile, but I don't see it as any cause for concern personally.
Yeah, no, I don't either. But speaking of causes for concern, I will highlight a negative. I try to do that so everybody doesn't think I'm always in the tank for positivity, because I am very optimistic about the economy all the time.
Yep.
Basically, U.S. consumer debt that's in delinquency rose in the fourth quarter to its highest in almost 5 years. But a lot like global warming temperature increases, why did they pick highest in 5 years? Well,
It was probably higher beforehand.
so in 16, 17, and 18, it was at its all-time lowest level since at least 2003. Okay? So anytime something's at a lowest of all-time level, guess what you're going to get moving forward?
Anything higher?
Anything higher, okay? So it did. Now, consumer debt has hit a record $18 trillion. And if you've been listening to our long-form podcast, if I was Uncle Sam, I'd be telling American consumers, those are rookie numbers. You got to get those up. 18 trillion, that's it. Stack that debt, right? You're only like half of what the American government's at. The American government's only a few 100,000 people. Come on.
Yeah, we got to catch up.
Yeah, catch up, losers, right? And that debt rose a half a point to that record $18 trillion. Now, out of all the debt, out of that $18 trillion, 3.6% of it was delinquent in the final 3 months of 2024. So that is the highest it's been since, it looks like, maybe. Actually, no. Hang on, let me take that back. Yeah, no, 21. Yeah, so I actually misspoke. I was reading the chart wrong. So it hit its lowest level somewhere, it looks like, around 22. And you'd have to go in 2019, it was still higher. It was over 3%. It was into the fours back in 2019. So, and it was higher than that all the way back to 03. To be honest, it's been artificially low since, looks like, 2020. I wouldn't say artificially low. It's just been really low. Yeah. And a large part of that was the thing that dropped it so low was actually the very same thing that caused all the problems, which is inflation. Inflation follows government spending by about a 2-year time lag. And so the government, due to COVID, just poured a ton of money, I think like $5 trillion into the economy. In our previous Murphy's Market Minutes from back then, you can go back to them. I talk about how Bank of America was explaining how Americans had the most in savings they'd ever had. And it all came from this flood of money. Well, we've since spent that. And so now, like, that sugar rush is gone. And now you're starting to see delinquency of debt creep back up to normal levels. So that's all that's happening there. But we are going to watch it, because if it starts to get out of hand, that could cause problems. So other than the markets going up, along with U.S. debt delinquencies, And inflation crept up to
Was it 3.3?
3.3%, I think.
I could be wrong on that.
I think it was 3.2, 3.3, somewhere in there, right? And so, the Fed is kind of trying to be cautious. You're probably not going to see them lower interest rates due to that. Inflation up, stock market up, tariffs up, debt delinquency up. I feel like there's a rap song about up somewhere in there.
Raising the roof or something.
Raising the roof. All right. Anything else that you think it's been 5 minutes? Anything else you think we need to cover?
I think that's a pretty good update.
Sweet.
Pretty good update on inflation, tariffs, all the above. But as always, there's going to be a lot going on next few weeks, months.
Yep.
So every week there's probably going to be something big, something new happening.
Yeah. So check out our long form podcast. And until next week, this is Elliot
This is Nathaniel.
signing off. We're 1 minute over time.